Welcome to another episode of Looking at the Markets with David Moadel. Let's talk about some options today. Today's episode is short-term out of the money or OTM options. Double your money in one day? Sounds intriguing. Let's find out. A low-cost way to get massive gains. Many traders try for massive gains by buying short-term, talking about weekly, out of the money calls and puts. This can be especially appealing to traders with small accounts, since these options cost very little money and can double or triple or more in value if the underlying stock or ETF rises sharply. So here are some examples of AAL, and that's American Airlines call options. As you can see on this particular day, the underlying equity, American Airlines stock, had gone up quite a bit. It went up a lot that day, to almost 2.5% in one day, which is a pretty big gain for the stock. Now, as you can see, the long-term in the money, and that's the top here, this was, well, actually today, July 7, and so the expiration date on this call is November 18. So I would consider that a fairly long-term call option. And this is in the money, this top one here, because it's a $27 call and the price is over $29. So this was purchased in the money. And this is also long-term, this call here, but it was purchased out of the money. And it's still somewhat out of the money. All right, that's a $30 call. And again, the current price is about $29. So this is out of the money. And this one is short-term, expiring tomorrow, actually. So it's got a day, maybe a day and a half left on it. And this is in the money, short-term. And this is out of the money, short-term. All right, so as you can see, the long-term in the money and out of the money calls went up moderately. All right, so yeah, they went up. They did fine. They did okay. However, the short-term, these are the two short-term ones, the short-term in the money call right here went up over 50%, almost 60% actually. And the short-term out of the money call right here went up a whopping 300%, tripling your money in one day. That's a pretty massive gain. And this is the dream that people have when they buy these short-term, weekly, out of the money calls. They're hoping for this kind of gain, or at least this kind of gain. But preferably, they're really thinking of doubling or even tripling their money. If you'd like an even more dramatic example, here are a couple of examples of COST, that's Costco, call options. And as you can see, Costco had gone up a lot on this day. Again, this is today, July 7th. And it's up a little bit over 4.5%. That's a sizable up move for the underlying asset here, which is Costco stock. So it had gone up a lot on this day. And again, as you can see that the long-term in the money calls did well. I mean, that's a good size gain there, almost 40%. But the gains on the short-term out of the money calls went up over 400%. So the gains on the short-term out of the money calls were much more dramatic than the long-term in the money calls. And again, that's why people buy them. That's why they buy short-term out of the money calls, because they're dreaming of this kind of gain, 400%, literally quadrupling your money in one day. But are these gains typical? 300%, 400%, are they typical? If the idea of tripling or quadrupling your money sounds appealing, I'm sure it does, keep in mind that short-term out-of-the-money options only behave like this with these massive gains if the underlying stock or ETF goes up sharply, has to go up a lot. And it has to do this very soon after you buy the option. If your prediction of what will happen in the next few days is wrong, you'll probably lose most or all of your investment. For example, if you buy an out-of-the-money Apple call, let's say, expiring in a couple of days, so that would be a short-term out-of-the-money Apple call. And if the Apple stock goes down, or if it just goes sideways, or even if it goes up but only goes up a little bit, then there's a good chance that you will lose most or all of your investment. You'll only be right and make money if Apple stock moves up a lot in the next couple of days. It really has to make a big move, and it has to do it pretty much immediately after you purchase the call. Long-term options, especially in the money long-term options, are much more forgiving if your prediction is wrong. They cost more money to purchase, they're more expensive, and you're not likely to get 300% gains, but you have the luxury of plenty of time for the trade to work in your favor. In other words, if the trade goes against you in the first few days or even the first couple of weeks, that's okay. Oftentimes you can just wait for the trade to come back in your favor and you can still make money. So here are some examples of how things can really go wrong very badly with short-term out-of-the-money options. These SPY calls, that's SPY, the spiders, which is the S&P, it's an S&P 500 tracking ETF. These SPY calls show how, if the underlying equity moves against you, long-term in-the-money options don't get hammered much. And here are the long-term in-the-money options. Okay, the underlying asset, SPY, it really didn't go down that much. It went down about a quarter of a percent, let's say. And these long-term in-the-money calls didn't go down that much. Not too bad. While the short-term out-of-the-money options can literally get cut in half or worse in one day, and you could see it down here. This is the short-term expiring in, let's say, a day and a half out-of-the-money call option, and it lost 50% of its value in one day. So check out these examples of SPY calls. You got your long-term in the money. Went down a little bit, but nothing terrible. You've got your long-term out of the money. That went down more. Still nothing terrible, but it certainly went down more than the in the money long-term call did. Then you've got your short-term in the money. As you can see, the fact that it's short-term really did a lot of damage to this call. And again, the underlying equity didn't go down that much, but the call really got hurt. And finally, the long-term out of the money, actually, I'm sorry, short-term, I should say, short-term out of the money option here, which, really got hurt. I'm not here to tell you whether short-term out of the money options are a worthwhile purchase or not. Use the available data, paper trade or make a few small trades, very small, to try it out and see for yourself what investments work best for you. If you'd like more help with options, stocks, finance, or anything else having to do with your investments or trades, feel free to contact me. My name is David Moadel, and you can email me anytime at davidmoadel@gmail.com. I hope this was helpful, and I'll talk to you soon.